Well, let's get after it. D7 here with freetradingvideos.com. This is the first full trading week of 2009. The S&P down 42 points. That's like the Dow being down more than 400 points for the week. That is very telling to me. If you go back in history, typically however the first week, trading week of the year starts, foreshadows what's to come, especially the first part of the year. So I still think there's more damage and stress to endure. This is Friday's numbers here. Dow down 1.6%. NASDAQ down a whopping 2.8%. The S&P down more than 2%. Let me say this. If the indices are down more than 2%, that is huge. A 2% move on the Dow, NASDAQ, S&P, Russell's is very, very big. Russell's down 4%. That is blood in the streets. Big, big, big drop. And a little itsy-bitsy mini-me pop on the VIX. What's funny was such a bloody day today, the VIX hardly went up at all. Not even, just barely over 0.5%. And they're really interesting to see. Anyway, here's the S&P. You'll see that I redrew a couple lines and I color-coded a couple of them. So if you want to follow along with me on how I draw my trend lines, take special note of how they're drawn here. Hit the pause button and feel free to follow along. The two big dark blue ones coming up is what's proving to be resistance and support. Today we are smacking our head, or smacking our feet, I guess you would say, on our support level. And zooming in here, you can see that we went below the 20-day and the 50-day. The 20 is my blue moving average and my 50-day is my red moving average. We are at major support right now, but we hit it with such ferocity that it just would not surprise me to see a breakdown here. Let's look at the MACD. I'm going to blow my MACD up here. The MACD is still above the zero line, but what I'm watching for Monday, January 12th, is a dip below the zero line here. Now, because it's the weekend edition, I'm going to look at the weekly. This is the weekly on the S&P, and I put Fibonacci numbers on here. I'm not going to explain Fibonacci's at this moment, but let's shrink this down a little bit so we can see these a little better. I drew this big swing down, Fibonacci numbers across, so let me draw it here. We're smacking our head at 38, our 38.2% number. This is a high probability of a drop here, and this is a bearish thrusting pattern that we have, or a bearish Harami pattern. High probability of a drop taking place. We do have some support here. We can see where support had been coming in right there. If we break down through there, high probability coming back down here, testing these lows that we made back here. So what I'm seeing is, well, here, let me pull this back up. Do this. All this is a big drop, bear pullback. We're just ready for another leg down. That's all that is on the weekly. So here, let's take a look at the Dow. Here's the Dow daily. Let's blow this up a smidgen. We have a rising wedge formation, which is bearish. We're below all the moving averages. We're at support. If we break down below support and we close there, that will be very damning for the indices, that the things should start breaking apart if that happens. Now you see we went below there with a shadow, and there. I don't care if we go below it, but if we just better not close below the support line, just like this one didn't close below. It went below and then came right back up, causing a hammer and running. So let's bring the weekly in on top of it. Here's the weekly on the Dow. Let's bring this back a little bit. Big drop. We're right at the 38.2 again. Look at this. Bullish Harami, or not bullish, bearish Harami. Really, I mean, I can very easily on a weekly see a nice leg coming down right there. So there's the Dow weekly and the S&P weekly setting up bearish. Let's look at the NASDAQ. This is the NASDAQ daily we're looking at. run up, kind of a rising wedge formation. Again, we do have some, let's blow this up and take a look here. We still have the 20-day and the 50-day acting as support, so that bodes well for this stock. Something that a couple of the viewers out there have noticed, very shrewd, that these patterns that we're getting right now could just be bear flags. Big drops, little mini-me up patterns right before the down leg. And that would make sense, especially when you bring the weekly into it. So here's the weekly. Big drop, rally. We haven't got to the 38.2. We're not there yet. So the NASDAQ's actually looking the strongest out of all the indices. But it still looks like a bear pullback to me. Big drop, bear pullback, leg down. Let's look at the Russells. Here's the Russell's daily. Just a nice uptrend. Support, resistance, support, resistance, support. We're at support. We broke down below the 20-day moving average. We still have the 50-day moving average to act as support. And if we go back here, is this a bear flag? A big drop, mini-me uptrend, and could we see another leg down? We certainly could. Let's look at the weekly on the Russells. Draw this back a little bit, big drop, a little pop here, bear pullback, right to the 38.2 mark. So the weeklies are setting up to crash and burn. Now here is what I'm after. I'm going to go back to the S&P. This is important to me. If we come down and we do crash, which would not surprise me doing so, we're going to find support right here. We're going to find support right here, going back on these lines. But I certainly would love it if we got down to 750 again or started toying with these areas. Because if we do, I'm going to be looking for buying opportunities in this area. Will I be looking for buying opportunities here? Might be a little early now that I'm really paying close attention to these weeklies. Probably, I would definitely be looking down here in the 800s. If we get to 800, we have support coming down here. That could be a buying opportunity. And if we did rally up there, we would have a higher swing low. And on the big monster chart on the S&P here, if we pulled back and then bounced right there at 800, that would make for a very yummy double bottom formation reversal pattern on the big weekly, and there could be some serious rallying taking place going into the next couple quarters. So that's what we're seeing. Really appreciate everybody following us at tweeter.com, and for those that haven't signed up yet, we got a free newsletter that we're going to be delivering out to anybody that wants it. You just go to our homepage and click on sign up now, and be glad to give you our free video newsletter. And looking forward to catching you guys and chatting with you in the forums. Till next time, we'll see you at freetradingvideos.com.